by the end of this video, I'm going to show you guys how I put it all together. Everything that you've learned the past 10 days, I'm going to show you how we put it together. And you must understand that it was broken down piece by piece so that you can be informed on the different aspects. Can you imagine the information overload you guys would have gotten if I just jumped straight into breaking everything down together? Because honestly, man, I feel like everyone just jumps in and breaks it down together, but you don't understand why they do that, or you don't understand the different concepts that we use. You might understand everything as a whole, but you do not understand how we use everything together, and you do not understand why we use it. So that's what we're going to jump into today. But I also decided I'm going to share the first PDF today so that you guys can get a little bit more insight as to why we use certain things. Because I've been getting a lot of questions on that, and I really want to clear it up. I really want to help you guys. I really want to help you guys understand. And I'm pretty sure by now some of you might have fallen off track, and I don't blame you. I mean, it's information overload, and I'm trying my best to just throw it all into 20-minute videos or even shorter. But just note, guys, that there's so much more to understand, and that's the beauty of trading. I'm so in love with trading, man. You put piece by piece together, and I'm so excited about it, bro, because yeah, I cannot put everything together into one video, but I'm trying my best to emphasize some of the most important concepts for you to understand. And the thing about trading is it's really 70% mentality and then 20% risk management. The other 10% is what you know. So that's an important thing. But what a lot of the people do not tell you is if you understand the 10%, if you really understand it, really understand why and the what, the 70% and the 20% takes care of themselves. For example, one of my risk management strategies that I use gives me so much confidence, so much confidence that I can live freely today. The market can do what it wants. Whatever happens to my trade, I know for a certain fact that I'm good for life because my risk management strategy allows me to have that type of confidence. Life can throw its curveballs. Anything can happen. I know that I'm set in stone, basically, to live up to the freedom that I set up to myself and the goals that I set up for myself and my family because of my one risk management rule. That's how much one risk management rule, one concept, that's how much confidence it gives me. I know I can lose 7 trades in a row. It has never happened. It will never happen. But I'm just explaining to you, the worst can happen. But I can take one trade and I can make 3 times back. That's just part of my risk management rule. But before we get into all of that and then the technicals and stuff, it's time for the daily rant, man. I feel somebody needs to listen to me today. So if you want to fast forward to the technicals, you're making a big mistake because maybe that somebody is you. And I want to start off by saying, if somebody tells you, hey bro, I'm going to sit in that Ferrari one day. Let's say your best friend comes to you and you tell him, hey bro, I'm going to sit in that Ferrari one day. Yeah, you guys are going to get amped up, look on internet for a bunch of Ferraris to buy, save it, screenshot it and put it on your wall. But that's not the real thing. I'm talking about the real thing, like the tangible thing, bro, the real thing. You need to manifest it. Now, I'm not referring to religion or any type of belief that you have. You need to really manifest it because what you think, you become. And how you feel is what you portray out to the world and portray out to the universe. I'm a firm believer of law of attraction. And I mean, I do have the videos and the proof of me walking to the dealerships. I do have all of that. But obviously, I cannot show it to you guys because it's personal and my life is super private. I'm very proud of that. But I have screenshots, I have emails, I have so many things of me messaging the dealer, even 4 years ago, 5 years ago, telling them, hey, I'm going to come and buy your car off your floor one day. I obviously got no reply because I was a young dude, but I have so many manifestation things that I used. Just closing my eyes, envisioning myself at the steering wheel, smelling the leather, so many things. And I don't really want to refer to a car. I used to close my eyes at night when I lay down in my bed, and I used to envision the ceiling that I wanted. I used to envision the type of birds flying around me. I used to envision what type of windows do I have. Is the windows going to be open at night? what my kids are gonna be like. I used to envision everything, and I still do. And man, there's not one thing that I haven't envisioned or that I haven't really, really wanted and envisioned myself to that I do not have today. I'm not saying that with an ego. I'm saying that to make you believe. What you think, you become. I'm going to say that again. What you think, you become. And I can read by your emails. I can see by your attitudes. I can see by your responses. If you're interactive with me, I already summed you up. And I can already see you're hungry, and I can see, I told my wife, like, listen, hey, this guy or this woman is going to achieve some great success. Because you can see it in how a person walks. You can see it in how a person talks. It's just out there, bro. It's out in the universe. You can see it. You can feel the energy. I spoke to somebody this weekend, and after like 5 minutes of talking to them, I noticed his friends was coming around and joining the conversation, and they were like, yo, we can feel your energy. Like it encompasses them. They cannot match the energy that they currently have, but sooner than later, by the end of the discussion, we were all on the same energy level. And I mean, I'm just excited to see what these people achieve. So the end of the discussion is really what you envision, you will get, but you need to envision it first. You need to see yourself there first. I don't care how many odds are stacked against you. I don't care what the world is saying about you. I don't care what your family is saying about you, your girlfriend, your boyfriend. I don't care, and you should not care either. You should be so tunnel focused for this, bro. You should be so tunnel focused for this, for the what you want in life, the tangible thing. You should be so tunnel focused for not this. Like, this is nothing. You should be focused for this, okay? And this, I mean, it's a dollar bill or $20 or something, but I'm referring to what you want in life. I'm referring to your dreams. I'm referring to your goals. I'm referring to a healthy family. You should envision it. You should want it so bad that you can almost touch it. When you close your eyes, you should be able to see it, to smell it, to hear it. And this all goes hand in hand with trading, bro. I'm open for discussion, but I'm going to shut you down very, very early, because there's no such thing that can give you the type of freedom trading has. I mean, bro, it's literally this thing, this one thing that can literally give you so much freedom. And it's not just you, it's your family as well. It can give you so much freedom if you just put in the time and work. And this is free, folks. This that I'm about to teach is free. I mean, yeah, you might not like the way I talk. You might not like the mask. You might not like the way I use my hands. You might not like the sound of my voice. I couldn't give less than 2 shits, bro. I'm about to help you. So get over yourself. Get over what you're feeling right now. I'm here to help you because I went through 10 years of hardships. I went through 10 years of nonsense, studying the wrong things, talking to the wrong people so that I can talk to you. You're listening to the right person right now. I went through the wrong things so you can go through the right thing right now. So grab your pen, grab your notebook, because class is in session, folks. And at the end of the day, you need to ask yourself, once again, who are you doing this for? I know you're doing this for yourself, but if you don't have a family yet, if you don't have that dream car yet, close your eyes after this video. Envision it. I really need you to be there. Touch the steering wheel. Close your eyes and envision the leather. Envision the birds making noises in your dream backyard with the swimming pool, the water just flowing. Just close your eyes and envision what you want. Maybe it is top job in a corporate office park. Envision the sound of your car. Envision your kids laughing, your husband being healthy, your wife being healthy, your mama there, your dad there. Just envision it, man, and chase it relentlessly for 3 to 6 months. Your life can change in 1 month. I promise you. I just need you guys to wake up. Just wake up. Stop being sleepy. Stop being boring. Stop falling to your own excuses. Just after this video, envision it, and I'm gonna need something from you guys again. Promise me down in the comments that you did what I asked you. You envisioned what it is you want. One thing. Don't tell me what it is. Just say, MC, I envision it, and I'm gonna pursue it relentlessly. But I really need you to envision it. End of discussion. I know you guys are going to I'm taking your word for it. You guys are going to do what I ask you because I believe in you guys. I know that you guys believe in this as well. But without further ado, folks, let's get into the charts. So, the first thing that I did, and you'll pick up certain chapters from the bootcamp. You'll pick up on it. Now, I'm not going to break everything down in one video because there's certain things I want to discuss as well so that everything comes together as a puzzle. But I need you to understand that what we learned in the past with the previous bootcamp videos, they're going to come together. And then I want to jump into the smaller technicals. I want to jump into the levels because right now we have the structure, okay? We have the roof, we have the floor, we can read structure, we can tell what day it is. If you cannot tell it yet, go and practice. Send me an email, ask me questions. But we can tell what's going on outside of the house, okay? We can say that it's easy for us by now. Now I need you guys in the next bootcamp videos to focus on what's going inside the house, okay? We need to focus on the finer details. So the first thing I do is I start on a daily time frame. That's what I always do. Okay, why? Because it clears up a lot of confusion. I don't want to come on literally the first thing I do when I turn my computer on is go to the daily time frame. If it's a Monday, Tuesday, or a Wednesday, I go to the weekly time frame. Why is that? Because the weekly candle just started forming, so I want to see where the volume is at. So if I'm on the weekly time frame, what I want to see the volume, I want to see the candlestick. So literally going to the weekly time frame and I can see the previous weekly time frame had a lot of indecision. I can look at the wicks and I can see this bullish engulfing right here. So I need you to focus on the previous weekly candle and then the current weekly candle. Only on Mondays, Tuesdays, and Wednesdays. You got that? After Wednesdays, the term that we discussed, candlestick maturity, kicks in. That's when we drop down to lower time frames and we see what happened on the weekly time frame, and we direct our analysis to the lower time frame to see if it follows with what the weekly time frame is telling us. So on the weekly time frame, I see we had a bearish engulfing on the 7th of July, and then I can see that we had the indecision candle. So that's very interesting, okay? I'm not drawing key levels on the weekly time frame. I'm not doing any analysis, nothing. At the end of the day, I want to have a look at the volume. So I can see this bullish engulfing candle is currently at the high. I'm building a thesis for myself. Then on the daily time frame, I want to drop down to the daily time frame. Now on the daily time frame right here, I want to draw the previous daily candlestick. I want to draw the analysis. What do I draw? I draw the high, the low, the middle, and so forth. So let's go ahead and let's do that right now. So I can see I have the high, I can see I have the low, I can see I have the close, and then the open is exactly at where the low is at. So that's going to be 3 levels. And let's take the EQ. EQ is very simple. It's like the VWAP. It's from the high to the low. So I got my equilibrium. Okay, straightforward, very easy. Anybody can do that. Now let's go to the H4 to see if it aligns. So on the H4 right now, what I'm basically doing when I'm dropping down lower time frames is I'm just looking at data. I just want to see more data, plain and simple. So on the H4, I can now just build a thesis for myself, and I can tell myself, hey MC, I can see we created equal lows right over here. I can see we create a high over here, but we have this exhaustion area. I'm just talking to myself, okay? I know people can get locked up for talking to themselves, but there's nobody in my room. It's just me, so I mean, I can talk to myself. I'm not crazy. So at this point, I can see I have a high right here with an exhaustion area. I can see we created equal lows right here with a higher low. So at the end of the day, not really doing analysis up until I can pretty much build a thesis for myself, and I can see I have an exhaustion area here, and I can see I have an exhaustion area down here. Okay, now I want to pause the video right here because I thought about how I explain this and the best way I can possibly explain this, and I came to this conclusion. Listen, it's okay to do analysis from 1997 as long as it hasn't been broken. Okay, that's the key thing. As long as it hasn't been broken. So pretty much what we want to see is I cannot go and draw this exhaustion area here. I mean, yeah, you can because it's pretty much already respected, but there's a fresher one. There's a new kid on the block. There's a new level. Why do you want to stress yourself out by looking at a previous daily level? Remember, levels are only as accurate as you draw them. No expert is going to come in and say, okay, yeah, you got to draw the level like this. It's going to be you. When you're sitting at your trading desk or you're trading on your phone, it's only you and the markets. So listen to what I'm telling you and reflect on the accuracy of the levels. This is a contradicting factor in the trading industry. People say this level is 80% accuracy. It's false. It's a lie, okay? Because the level is only so accurate as a context that you put next to it. For example, an exhaustion area. What is it? You cannot just go and draw levels on the chart without context, saying, yeah, I drew an exhaustion area down at the bottom because MC said so and it's gonna work. No, bro, it doesn't work like that. You have to have context around why is the exhaustion area down there, why is the equilibrium up there, why do you only have 2 levels on your chart. That's why I can trade with almost like 2-3 levels on my chart. I remember I said it once, I look for 9 things. This damn pinky, man. I look for 9 things. Okay, so I already showed you 2 of them. I'm going to show you one of them today. And then pretty much, let's remove this one right here. You can see by now I have 2 levels on my chart. Plain and simple. Let's go down to H1. And then on the H1, this is where I get pretty finicky about my charts. I get very in detailed. I like to look at the overall view on the higher time frame, but I also like to reflect on what the lower time frame is telling us. So now I basically jump between the time frames to see if it aligns with what the lower time frame and the higher time frame is telling us. So pretty much I can see I have an exhaustion area formed here. There wasn't a new exhaustion area formed here, so I'm going to leave this one. I'm really just going to delete this exhaustion area down at the bottom, and I'm going to delete this low because anybody can see that's a low. I'm going to draw an exhaustion area over here and then just go to the daily and see what's going on with my chart at the moment. I can still see the high, can still see the close, I can see the exhaustion area of the low. Going to the H4 right now, I can see I pretty much marked out the low, I marked out the high. I never want to be trapped so much into my own ego and my own thoughts to the extent that I'm stuck on one time frame. I'm stuck on the lower time frame. I never want to do that. That's the biggest mistake I can do. I'm only shooting myself in the foot. So I want to constantly jump between the lower time frame and the higher time frame and see if they're all aligned, pretty much. Back to the H1, and I can see, okay, bet. We got our equilibrium level. Now I just pretty much want to double check everything. So from the high to the low right here, EQ is set. Exhaustion area is pretty standard. Exhaustion area. Okay, exhaustion area at the top is pretty much okay. Now, if it comes down to the H1 rejection, if I go to H1 and I see a rejection, or H2, I'm pretty much going to just reiterate my point over here. And what I sometimes do is I also draw a horizontal level like this, and then I just leave the extended exhaustion area somewhat like this. And one thing, out of sight, out of mind. So always make notes for yourself. I don't know if this is helpful or not, but sometimes I will just come to the charts and I'll look at something and I'll be like, damn, why did I draw this level again? I'll be like, what is this again? So hopefully this helps. I use it a lot. I would love to go around, do my things, run some admins, go out of the study or go out of the office and just do my daily life things. And then, because believe it or not, I'm not sitting like this, like in front of the computer screen the whole day. I set my alerts, I set my notes. When I come to the screen and I hear alert hit, I immediately know what's happening. I immediately know what's expected of me. Remember, we're high profile athletes, okay? So we have to constantly be reminded of our job, of our task at hand. So if you don't take notes, I kind of feel like you're just dabbling around, man. I kind of feel like you're not prepared for anything. And the market is open 24/5, the Forex and commodities market. So to the point where you're back and forth between the screen and life. And if you don't make notes for yourself, if you don't constantly remind yourself to be on the ball, be on track the whole time, you're missing out on some money on the table. So M30 exhaustion areas right here, H2 exhaustion areas right here. So now I know, okay? I know right now we're on an M30 exhaustion area up top. We're on an H2 exhaustion area. So now I'm like, this means trouble. So let's go to the high time frame and see what's happening, okay? We're currently on the weekly time frame, and I'm seeing we're at the high of the last week, okay? But here's the thing. It's only Monday. So we might get a reversal off from that. If it was Thursday or Friday or NY session Wednesday, would have been a different story because volume would have already kicked in. But for right now, we're only testing the traders up top at the high, well, the open of the previous week. Going to the daily time frame, I want to look at the trend of the daily time frame. So on the daily time frame, we're still in a bearish trend because we've got bearish candle, bearish, bearish, bearish. The bullish candle did not close above the bearish candle. We got another bearish candle closing below, but it's still okay because we know we're in a bearish trend. And then all of a sudden, a bullish candle, but still does not close above. So the candle that we're forming right now on a Monday, this beautiful Monday, that one broke above the bearish candle. So that means if we get a close right here, then we can potentially look for taking longs the following day. So this is a typical point where I like to look for false break reversals or red setup day, green setup day, but I mean we can clearly see we don't have that because it's a bullish day, bearish day, then a bullish day, so it's not a red setup day or a green setup day. It cannot be a false break reversal either because we already indicated last week's high and low. This was last week's high and low, so that can also not be the fact. So pretty much we're just going to trade price action, or I'm going to trade one of my strategies, the MadCharts, or just going to basically combine the price action and the MadCharts together. But for now, there's no day count, so it's pretty much just a standard day one Monday, up until if something happens, like a red setup day or green setup day that we're waiting for, then I'm going to start my daily count and I'm going to react off from that. You never want to try and predict, you always want to try and react. So then jumping straight forward, on the 30-minute, I can see we're above equilibrium, so buys are looking good. I can see we broke above Asia session, that's a setup. I see we're looking good. And right now, here comes the lesson, folks. One thing I want to talk about, which is included in today's notes, is a lot of traders, and we already discussed this, but I want to get a little bit more in detail on this. A lot of traders think that you should trade like this. You should buy there, buy there, buy there, and you should watch out for this area, watch out for this area, watch out for this area, or exit there. I don't know what it is, okay? Now, I hate to be that guy, bro, but you're wrong, okay? You're wrong to think like that, because how do you know the market's going to turn right there, you know? And let's say you get it right on the second trade, you may be lost and you're wrong, and then that hits your confidence. Why not just wait, okay? That's a topic for another day. What I want to talk about today, and I learned this when I traded futures, if you really want to actively spot volume or be able to spot volume, you will see something like this. Okay? I'm not focused, I'm really not worried about this right here. Remember what I said, everything has to be in context, folks. So what's super important is for you to remember this. You need to ask yourself, what is happening there? What is happening there and what is happening there? You need to ask yourself, why is that happening? You need to understand volume is being accumulated there, and it happens from the higher time frame down to a lower time frame. So you will see this on the daily H4, H2, H1. Now on the time frame that you're trading on, you will see this as well, but then it has to follow the trend of the higher time frame at all times. So basically, I want to understand, did the London low get hit, or did we tap Asia low and then broken above? So then that means that we have liquidity up at the top. Or did the NY session just get tested down at the low before pushing up high? These areas provide key levels for the following day or the following session, moments where the market accumulated. Now there's a lot of different rules that you need to understand, like you need a strong impulse from that move up, you need at least 3 candles but not more than 7 candles at the accumulation, but that's a topic for another day. I just want to communicate to you guys and let you guys understand that there's more than meets the eye with the chart. And I don't want to confuse traders. If you're a new guy or if you're experienced and you're already scratching your head, please do not worry. Everything is going to make sense later. I promise you. Right now, I just need you to be like, okay, MC, and I need you to take notes, because I promise you everything's going to make sense later, if it doesn't by now. So let's go back to the chart and we're going to have a look and check what's happening. So on the current day, we can see we broke above Asia high. That's a setup. And then also, subsequently, we can see we hit the first hour low of London session. Right now, we can see we have an engulfing candle off from that low above EQ. Pretty good buying opportunity there. But I want to talk about what we're seeing right now. So very important. We can see we rejected the weekly high. We can see we rejected last week's high right over here that was created on Friday. It's also an exhaustion area on the M30 and also an exhaustion area on the H2. So this is where my risk management protocol will pretty much jump in, and I'll pretty much know when to exit. But I need you to focus on what the higher time frame is telling you down to a lower time frame. So let's jump into if you potentially saw an entry. So remember what I said, okay? I'm looking for 9 things. Now, I can already see we're above equilibrium. The day count's not there. We have bullish volume on the higher time frame. Now on the lower time frame, what we're looking at is we can see London low being tested right here, and I can see the 15-minute candle not rejecting the EQ but hitting that low and then pushing back up. So what I typically want to do, I'm just going to delete this, but it's still valid. I'm just going to delete it so that I can see clearly. What I typically do is I like to look at the lows and the highs of the body. So if I see in context, we created exhaustion area down at the bottom, something like this. Okay, I'm just going to delete it once again because I want to see clearly. I can see we pushed back up into that range. So this is not it, but it's the same concept as a false break reversal, folks. It's exactly the same. What happens on the higher time frame will happen on the lower time frame. Exactly the same. Nothing changes. So it's the same idea behind it. So we can see the bullish candle right here. Then what I want to do is I want to drop down to the lower time frame. Can you see what happens on the lower time frame? Immediately, we have an engulfing candle right here. We have an engulfing candle, so that's what pushed the 15-minute time frame, 15-minute candle up higher back inside of the range. We can see we created a high, the market came back down. What happens then is we have an engulfing candle again. Now this is inside, there's no coincidence of this happening at the last 10 minutes of the last hour. There's no coincidence, okay? It happens every single day. You just need to understand how to read it. So candlestick maturity, once again, folks. We have the H4 candlestick. Let me just show you. We have the H4 candlestick formed, okay? The H4 candlestick, engulfing candle, another engulfing candle. So candlestick maturity is supposed to tell you that, look at the timing down below. It's 11 o'clock. So that means that it started at 11 o'clock. So the first 2 hours will usually be a range and then an explosive move to the top side. It depends on how the hourly candles look inside of H4 candles. Let me show you. So we want to look at H1. So H1 is consolidation on the H111. I'm looking at the time frame, the time down below. We have consolidation. The market is ranging. And then we have that low being tested. Just keep track of me. We see the low being tested. Now look at when I jump down to another time frame lower. I'm going to delete this and I want to expand this one right here. I need you to focus on this low right here. So now what I typically want to do is I want to go down to the 15-minute time frame. I use the 15 in the H1 and then the 30 in the H2. That's part of my entry method right here. So on the 15-minute, what do we see? We see a rejection right here. So what does that tell us? Okay, that is 12:15. Remember what I said about the first hour. I don't want to get you confused. The last hour. Sorry, remember what I said about the last hour? That's what I meant. The last hour, 15-minute time frame sets us up for the new hour if it didn't consolidate. So that means that this H1 cannot test at the low and it pushed back up. I'm still not convinced. Okay, I'm still not convinced. So by this point right here, I'm still not convinced that we're pushing bullish. That was a setup, yes. So you might enter half size. That's up to you. What I want to talk about is being convinced with the trade. So let's go back to H4. And on H4, we can see we created this week. So by the time that I was still not convinced, where I drew this line, we already started rejecting back up. So I need you to focus on this area right here. Let's go back down to a 15-minute, 16422, right here. So at this point, it was when we can say, okay, we're pretty much convinced. And look how they just go hand in hand, bro. We can see we have an engulfing candle. We can see the market came up. We can see it came down with another engulfing candle. So by the time we create another engulfing candle, one could have entered and it would have been better to enter on whichever time frame you want, because I always get this question, MC, what time frames do you enter on? I enter on the 2 hour, 30 minute, H1, 15 minute. So my stop loss, I only use a 5 minute for my stop loss and for more data. Don't get confused, don't get it twisted, folks. The 5 minute is only for more data and for the tighter stop loss. So at this point, where's your take profit going to be? Your take profit is going to be, and can you believe it, at the exhaustion area at the top. So by utilizing what the H4 told us with the candlestick maturity that we learned in video 2 and video 3, we know that that flip is coming, because we can see we already broke above the high, we already broke above the Asia session. That gave me confidence that we're going to push bullish. I'm still not convinced, okay? So we can see the H4 candle open, we can see it push back down. The minute I see the market pushing back down, I drop down to the H1. So when I drop down to the H1, I can see we already hit the lows of London session. Still not convinced. Let's go to the H1, let me show you. Still not convinced, so let's go down to the 15 minute. By the time the 15 minute candle closed and that H1 rejection happened, we created a fat bullish engulfing with a rejection coming down and closing above. Say it with me, still not convinced. So I know that because this candle right here did not break this low. So, I mean, it's a dead giveaway, man. By the time it closed like this, and then we have a bullish engulfing breaking both of these candles and closing this bearish trend, exactly like the daily. Remember, nothing new under the sun, folks. It's the same process over and over again. By the time that happened, I mean, it wasn't closed yet when I dropped down to the 5 minute. Already on the 5 minute, I dropped down to the 5 minute because I wanted an exhaustion area. But let's say you wanted to enter at the break of this high. The point is, I was not convinced, okay? When did I become convinced? I became convinced when we have an engulfing candle, and you can look at the 15 minute right here. When the 15 minute closed above this area here, when I saw this engulfing candle, I was convinced. So it all depends on entering half risk, entering full risk, not entering, what you want to do, but you have to have a look at confluence areas. And I teach my members to look at 8 things, not entry rules, 8 confirmation keys that they need to look at, because that's my goal here, folks, is I need you to systemize your trading, okay? There's a reason why algorithms are running 80, I think it's 80% right now, I'm speaking on a correction, 80% runs with the market, okay? Because there's patterns, there's systems in the market, but that's the easy part. Okay, that's super easy. I need your mentality to be up to square, because if that's not it, if you don't have confidence in what you're doing, then you might as well just give up, because entering and exiting is the easy part, folks. If you can understand why you're doing that, following a systematic approach, okay, A, B, and C needs to happen, then you're well on your way to living the life that you want, man. Nothing can stop you then. As long as you have a phone, you have this Dr. Greenbill right here, and you have internet connection. So I hope this helped, folks. I'm going to drop down to the entry methods and then the lower time frame methods in the next videos. And honestly, I hope you guys learned a lot, man. I'm dropping the PDF down below in the caption. Send some love in the comment section. I'll see you guys in the next video. Peace out.